Cardano's support is starting to falter. We're starting to see the support weaken as time progresses, and this could be really bad for Cardano's ADA. In today's video, guys, we are going to be taking a look at the technical analysis on ADA, sharing my thoughts and opinions on what I think is about to happen next. As I get into today's video, guys, do go ahead and smash that like button. Really do appreciate that. If you are new to the channel, why not go ahead and subscribe? And let's kick things off by taking a look at what's going on here with Cardano. So here we have ADA paired up with USDT. We're on the one-day Binance chart. And what we're talking about is this area just down here between the 42.27 and 44.12 cents. This area was a previous area of support. We could see that we had no closed positions inside this yellow box area, as you can kind of see with all of these that I'm just highlighting here. Most recently, we did get a closed position on the 11th of May inside this area. Okay, we then closed again on the 12th of May, again on the 13th of May, and today we are still inside this range. Now, the support is still currently holding. We are above this key area. However, we need to consider that this is for the first couple of days closed inside this area. It shows that there is now less of a buying appetite in this area. Before we came into this range, we came straight back out again within the day. Now we can see that we're lingering in this range. This is showing us that this particular area of support is weakening and we're likely to push our way through it. This means that we are unfortunately looking quite bearish here for ADA. To couple that, we can also see our moving averages, the white line being the 200-day exponential, the blue line is the 50-day exponential, and then the yellow line is the 50 simple moving average on the daily time frame. Now, we do see here with the 50 SMA, the yellow line, looking to cross down lower than the 200 EMA, this area that hasn't yet happened would be classified as a death cross for ADA and would signal to investors and traders that potentially we are likely to see more slippage to the downside. Now, we have to obviously consider that these indicators, the 50 EMA, 50 SMA, 50 EMA, 200 EMA, they are all lag indicators. They only show you what's already happened, but people will overreact to the idea that we are slipping down. It's a big scary name after all, right? Death cross. Now, if we take this into consideration, we take the fact that we have this support area that's weakening, we have a death cross that's looming, it's probably only a couple of days away, and we go ahead and draw in our trend line here, we can see that we are, of course, in lower highs, lower lows, death cross looming, support weakening. Unfortunately, these things are not looking great for ADA, and it does look like we have further slippage to the downside. In the previous videos that I've done, I've talked about and spoken about the 38.65 cent. That's this 1.618 area on the chart. This is the area that we want to avoid if we want to be bullish on ADA. This is because we would have to consider everything that would going on here as a big five-wave movement should we come down into this range. And following on from our kind of ideas here is we did have a target of 33.83 to 37.49, this completing out a wave 3, which would be this one right inside here, and basically looking to finish off the wave 3, which would basically be going past 1.618. Let me show you. So you'd have a wave 1 over here, a wave 2 over here. All of this move down to this yellow box I just said would be a wave 3. You bounce up into a wave 4, and then we go down back towards 30 cent in a 5-wave movement like this. This would be not the best position for Cardano. Okay, we want to avoid it where possible because it does mean that we are likely to see more slippage at a later date. Now, we have got hope that maybe it would be an irregular flat. Like this one right here, okay, and this irregular flat has to end in 5 waves. So if you're really bullish on ADA, this is one possibility that could play out. My concern would be that actually it's just a 535, a 3-wave corrective pattern that would basically take us down towards that 30 cent level. We bounce back up to maybe 50 and then just collapse back down, moving more towards kind of the 20 cent levels once again, maybe looking for a double bottom with what happened back in June 2023. Okay, that's what I want to avoid. I don't want to see that happen for Cardano, but it's something that we should kind of acknowledge, and something that we've kind of been talking about and expecting, right? Because if you think back, if you were around on the channel back in 2022 and 2023, one of the things that we were often saying is we kind of wait for the trend reversal, right? So we wait for a bear market bottom, we wait for that rally to the upside, and then we buy the retracement, knowing that our bottom is likely in over here, allows us to buy up here, not at the exact bottom, but gets close to it, knowing that we are likely to see a very significant surge to the upside afterwards, right? So that's one of the strategies that we were talking about way back. And this is a scenario right here where we could see a great pullback in the market. It's been really, really fantastic for just that strategy where we don't try to time the bottom. We're not dollar cost averaging necessarily, but we're looking at basically buying these kind of dips 50% after a trend reversal, right? The trend was the bear market, and this is basically the first major correction since. There's been a couple on the journey actually for ADA. There was one all the way down here back in September of 2023, which was also a fantastic place to be purchasing up and dollar cost averaging, because dollar cost averaging is of course a fantastic strategy. And what I was referring to was an alternative to that, which is basically if you haven't got time to dollar cost average, haven't got time to watch all the charts, all you do is you kind of wait for a trend to form. You then wait for the correction that falls afterwards after a fantastic surge to the upside, and then you start dollar cost averaging into that one or buying that dip, and then you go into the next big parabolic run to the upside. So although we can see a lot of weakness on the daily time frame here, and we are still looking for a bit more slippage to the downside towards 33.83 to 37.49, I do hope that this is where we kind of finish this off and start moving upwards. If not, then we will come down deeper. We will be looking for much cheaper prices on ADA and much better opportunities to dollar cost average. But either way, I'll be looking at purchasing up in this low range, or anything kind of less than 35, or well, anything less than 37 cent. We'll look for that rally, and if the data tells us to kind of get out of those positions, we get out of those and then we buy back at a cheaper rate. Okay, lots of different strategies, lots of different approaches to this one, but one of the things that's quite clear at the moment is that unless the bulls can take us higher than this range of 44.12 and potentially higher than the 200-day exponential moving average, which is currently sat at 50.84, unfortunately I expect ADA to continue to drop to the downside. So we'll be looking for the breakouts. Hopefully we can get one. If we can't, then obviously we're still on track for finishing off these structures. A breakout for me will be looking at kind of a closed position above the 200-day exponential moving average, and hopefully we'll start to see a bit more positivity at that point. But if we can't do that specifically, then I do think we're likely to see further slippage to the downside. From a smart money concepts point of view, we are in a technical bearish structure on the weekly time frame. We have got a weak low indicating it's not likely to hold. There's not a lot of support in here. Throw in the VPVR, this is the volume profiles, you can see that there really isn't a lot of volume in here. Let's go ahead and zoom out just a fraction and get that to recalculate. You can see that basically if we lose this area, we're going to be dropping down right into this area of 37 cent, because that's where the majority of other people were buying and selling ADA. That's where the volumes were previously. It's likely to be where the volumes will be once again. So taking a look at this, where we are right now, this is that danger zone. We're kind of just teetering on the edge of this volume profile. Again, looking to come down potentially towards 37 cent, which will be lower than our 1.618 target range. Okay, so very important that we understand that we have got bearish structures according to the simple moving average, exponential moving averages, Elliott wave theory, smart money concepts, VPVR. Let's go ahead and take a look at momentum. Momentum is still shifting down here on the stochastic RSI, lower than the 50 level, looking to come down towards oversold, but not there yet. So it's still indicating we have more slippage to the downside. If we go ahead and take that off and throw on the relative strength index, you've got a hidden bearish divergence on the 9th of May. We did, of course, see that kind of playing out. We started to see a little bit of slippage here, but we're still lower than the 50 level, not over sold or overbought or anything like that. We're in this little range here on the relative strength index, and divergences are there still, so we can see bearish divergence or hidden bearish divergence at that. MACD is actually showing us a positive histogram and positive moving averages, but again it's so laggy. I don't like this one. It only really shows you things that have already happened, and it usually only prints them after it's happened, a significant number of days ago. So I don't like to use the MACD. I much prefer to use the stochastic RSI, the divergence indicator. We can also take a look at the volume profiles and how at the moment volume profiles are dropping since we had that initial surge, but they're still kind of showing us with the idea that we have more movements to the downside overall. So yeah, I guess for the daily time frame, there isn't much more to say. Let's roll this up into the weekly. On the weekly time frame, we're in a bullish pattern on the smart money concepts. I'm not too concerned about that. We're in a bullish pattern, in my opinion, on the daily time frame, on the weekly time frame here as well. So let me show you. We have our kind of idea of a 5-wave movement coming to the upside. Okay, it's looking pretty nice. And this is just the correction, the wave 2 of what I believe will be a big, fantastic wave 3, because we have got those higher targets. Let me show you this. Right, this is a potential wave 1. This will be our wave 2. If it comes down lower than 30 cents, fantastic. And then, of course, we'll have a big wave 3. Okay, and then wave 4, then wave 5. That's what we're looking, because that is basically going to mirror what we had back in 2020 and 2021. Okay, it takes some time to play out, but you can kind of see it playing out here on the weekly time frame. Our kind of conservative target ranges are 534 to 1273. And of course, we have that moonshot, which will be very difficult to do, but will basically be between $38 and $129. I'm not expecting us to reach $130 in the next, cycle or the next kind of bullish market. But at some point in the future, I think it's a possibility for ADA. I think there's a lot of people who regret selling Bitcoin, for example, at those really cheap prices. And I expect us to kind of see continued growth for ADA over the years. So for the most part, I think we are actually in a reasonable position. On a weekly weekly AMAs and SMAs, so the simple moving averages, exponential moving averages, we are lower than the 200-week 200 EMA, but we're above the 50-week simple moving average. That's currently support. If we lose these, I do think they're to be short-lived. I do expect us to kind of start rallying back up soon after. If we throw on the Gaussian channel is in a green area, just on the retest right now. We have closed inside the Gaussian channel, but as you can kind of see, this is a great place to be. As soon as this thing has turned green, we've seen fantastic runs, and that's kind of what I'm looking for over here as well. So although we're inside the Gaussian channel right now, we're not underneath it or anything like that. This is actually a pretty reasonable place to be on the weekly time frame. So I guess for Cardano here, things are looking okay. Conservative 534 to 1273. More kind of hopium 38 to 130, but you can let me know your thoughts on all of that in the comments below, and let me know what your price prediction is on the longer term for Cardano's ADA. Are you just looking for a nice $5 to $10 range, or are you thinking actually this thing has a lot more legs to it and potentially will be holding out for those higher range targets? You can let me know in the comments below. If you found today's video useful, smash that like button. If you're new to the channel, subscribe, and if you haven't done so already, I urge you guys to check this video out right here, where we're discussing some of the other things that are going on in the crypto space.